Assalamualaikum and hello everyone. My name is Nurdina Afiqah Binti Farif, a student of Foundation in Business. Today I would like to present to you introduction of financial accounting and cost accounting. So the intended learning outcome, firstly, you will be able to define what is the financial accounting and cost accounting. Secondly, you will be able to differentiate between financial accounting and cost accounting. Next, you will be able to understand the function of financial and cost accounting, understand the objectives of financial and cost accounting, and the last one is identify the uses of financial accounting and cost accounting. So here is the table of contents. You will be going to see the definition, the differences, objectives, and external and internal users. Firstly, the introduction. Based on this slide, the key difference between cost and financial accounting are that financial accounting is focused on issuing financial statements to outside parties, while cost accounting is inwardly focused on management decisions. First, the definition of financial accounting. Financial accounting is the process of assessing and analyzing business transactions and producing financial statements that reflect a company's financial health or its performance. This process includes recording, summarizing, and reporting a company's business transactions. Next is what is costing accounting? Cost accounting is a process where they document, analyze, summarize, and study the company's cost spent on any process, service, product, or anything else in the organization as a business activity. This helps the organization's cost controlling efforts as well as strategic planning and cost cutting decisions. Next is the difference between financial accounting and cost accounting. Firstly, the objective of financial accounting is to provide information about the financial performance and financial position of the business. Meanwhile, cost accounting has the objective of provides information which relates to the identifying of cost of control costs and for decision making about the cost. In the terms of audience, financial accounting has the audience of shareholders, financial analysts, investors, creditors, credit rating agencies, and regulatory agencies, while cost accounting is internal management at different levels, which is managers. For terms of recording of information, financial accounting only records historical data, while cost accounting records historical costs, presents, and also estimated data. Lastly, for the time period, financial accounting usually a year, while cost accounting is prepared anytime when it is required. Next is the objectives of financial accounting. Firstly, financial accounting is used to facilitate rational decision making as accounting business has taken upon itself the task of collection, analysis, and reporting of information. Secondly, financial accounting is used to ascertain the operational profit or loss of an entity. Next one is to protect business properties, where it provides protection to business properties from unjustified and unwarranted use. Next is to provide information system by collecting and communicating economic information. Last one, the objectives of financial accounting is to keep systematic records of financial transactions. Now is the objectives of cost accounting. Firstly, it is used as measurement of efficiency of a business. Next, fixation of selling prices, which cost accounting helps to find out cost of production and fixation of selling prices of the product or process job or operation. Thirdly, cost accounting is used to ascertain cost of production of each job, process or work order by applying different methods of cost accounting. Next, it reports to the management periodically, which may be monthly, quarterly, or half-yearly. The last one for objectives of cost accounting is it is act as cost control procedure. It controls costs by setting standards and compare with the actual one. Next, here is the internal uses of financial information. Firstly, we have finance manager that use financial information to evaluate the ability of the company to pay its business debts. Next is management that use financial information as a guideline to plan, organize, and control the organization and analyze performance of the business. Marketing department use financial information as a guideline, the policies and the price of the products to be marked. And then we have human resources manager that use financial information for employment opportunities, provide salary and benefits to the employee. Next, the users of employees that use financial information to assess the stability and profitability of their employers. Next one, we have employee earnings. They use financial information to ensure their demands to the employer, such as salary increments and other benefits, are reasonable compared with the company's financial ability. Next one is obviously the owners of the business to provide funds or capital for the organization, keep an eye on the returns from the investment. Next, the supervisors that use financial information to supervise the day-to-day operations of the business and direct workers and employees. Last one, the internal users of financial information is Chief Executive Officer that use financial information to make decisions about the future of the company. Next, external users of financial information. Firstly, investors. Why they use financial information? Because they use it to determine whether to buy, hold, or sell shares and investment. Secondly, lenders. To assess the ability to settle amount owed to them when due, such as loan and interest. Next one is creditors. To assess the ability to settle the amount owed when due. Suppliers. As a financial information used as assessment over short period or long term if the company is likely to be their permanent customers. Next, external users is customers to assess the ability of the company to continue providing products and service. Government authority. They use financial information as information to enable them to regulate their business activities, determine taxation policies and basis regarding national income and similar stories. Government agencies. They use financial information as they use the information about allocation of resources such as activity of the company. Public. They assess contribution to the local economy such as employment and business opportunities for local suppliers. Then, regulators. The company need to send the Securities and Exchange Commission copy of the statements. The last one, the external users of financial information is the trading partners that use financial information to decide whether to trade with a particular economic entity. That's all from me. Thank you for giving your attention until the end of presentation. Thank you.